So, yeah, thanks so much for bringing me on to the show. Appreciate this. I've watched you now for a few different episodes and got a sense of what it was that you're doing, and super glad to be here and humbled to be one of the guys that are on the show. So, my name is JJ Mack. I work with American Pacific Mortgage. I've been here now for over 15 years. Started out as a loan assistant and worked my way up to a loan officer, got my license, and ended up now managing and been doing that for probably 8 years and grew a branch and then acquired another branch and then now just continuing to try and grow and help more and more loan officers face the challenges that we're dealing with in this crazy market and continue to push the envelope and meet expectations and all that good stuff.
Man, so much. That's a lot. So you actually just took on another branch, you said? You started another one?
This was a maybe a year and a half ago or so
Still fairly new.
when the market was turning. I was trying to look for other branches that maybe um, needed a little bit of help and getting them back on the right track. It was a tough time in the industry, and
I can only
so
imagine.
yeah, came across a an opportunity and um, an amazing opportunity. The people here at this particular branch that we joined up with, um, probably some of the coolest people I've ever met. So I'm super glad that I got the opportunity to do that and help some of these loan officers meet their goals and what they want to do.
Very cool. That's awesome. I'm sure they love you. You seem like a very awesome person to work with. So does that's the 20 loan officers that are working under you? Is that
Yeah,
included? That's a lot.
some of those were the ones that had come on. Yeah.
Very cool. So, what are some of the key leadership principles that have helped you manage and grow the team effectively?
Yeah. So, we have, like I said, just about 20 loan officers here, and we've got, I think, 6, 7 staff. And so we've got a growing branch, and it's trying to continue to grow it. And I think when you talk about leadership in a growing branch like this, I think there's three things that I've tried to focus on. And those three things are the main thing being empowerment. And I think the other two are collaboration and accountability. And so I think when you try and be an effective leader within a branch like this, we're going to need to continue to grow. And especially in this market where there's people that want to help or that we want to help continue to grow, we have to make sure that the things that we're growing around are important to the loan officers that are here. And so I think that, like I said, or having empowerment is the most important thing. And most people don't realize that. But when I look at what I would want as a loan officer going into this space, I would want to be empowered by what I'm doing. And so by empowering each and every loan officer here with the tools that we have to give them and the freedom to go out and excel what they're good at, I think we've been able to cultivate a really good team that's not only motivated, but they also are deeply invested in the branch's success, not just their own.
Not just their own.
And and so I think that's really the biggest thing. And obviously, we work directly with each and every one of them, collaborate with them, make sure they're not on an island on their own. And then we try and hold them accountable for the things that they want to do, the goals that they have. And so I think those are the three things that we have that are the three key principal leaderships here.
I like that. Empowerment's huge. That I've never actually heard someone say that before as far as in a leadership role. So that's very cool. I could and just taking it in what you would want and like personally, I think I would love that too. And keeping me accountable for the things that I want personally for myself. I mean, that's huge. And I can only imagine you guys are probably a very good atmosphere that you've have developed in your offices. It sounds like.
Yeah, man, it's great. I mean, we'd love to have you come by sometime and check it out. It's a cool spot. It's the culture here is pretty amazing. We love it.
Yeah, I got to see the when I came for the meeting for
That's
with
right.
Anthony. Yes, I
Yeah,
did get briefly, I walked through, but it's huge, yeah, it's nice, and, I was just, very impressed, so I didn't even realize that you guys had so many, loan officers, so that's pretty cool, or staff members too, so,
yeah.
uh,
Thanks, Kevin.
yeah, absolutely. So, collaboration and accountability, and empowerment. So what else is there anything else that, other key principles that you may wanna throw in there?
I think that just in those things, in that vein of what we believe in, I think what we do is we hold to make sure that they're accountable and make sure that we're collaborating with them. I think the sales meetings that we have um, really just ensures that everybody's perspectives are integrated within our branch in our plans to continue to build the team that we have. And so I think those sales meetings are very important, and it also allows us to show them respect um, in the shared goals that we want together. So it's not just about what I want as a manager of this branch, it's about what they want to see change so that I can go back and make it happen. And so I think where a lot of leaders get mixed up is they sit on this ivory, they sit in an ivory tower, and all they do is they try and you know point and how this is what you need to do to get better. This is how you need to make sure that you go out and get more business instead of sitting down with somebody and collaborating with them on how somebody can go out and be more successful. And so I think in all, when we have a loan officer like myself that did loans and are still doing loans, lead a team that is doing loans, it's going to be successful because now you're not putting a manager in the leadership position. You're putting somebody else that's a peer that just wants to help. And so I think if you can, in other areas of our world, if you've got I don't know, I just got my hair cut today, so I'm thinking hair salon for whatever reason.
Sure.
But if you're opening a hair salon and all you want to do is run a hair salon, but you don't have any experience running a hair salon and you've never cut hair in the past, you have no clue how your barbers are going to feel. All you're going to know is I just want to make money running a hair salon. So I think you really need to be in the trenches and you can then deliver on the things that your loan officers or whoever whatever the business is.
Makes so much sense. And it probably shows too, like that person that just comes in and has no idea what they're doing and just trying to, you know, boss around and do all that kind of stuff. It's like compared to someone like yourself, it's there's a big difference. I'm sure it shows.
Well, absolutely, and that's why initially we didn't coin the empowerment phrase. We were just focusing more about the collaboration, the accountability piece. But then within those two things, we realized that what we're doing within the collaboration and our account and trying to hold accountable is what we're really doing is we are pushing them to be empowered by those things. It's like we want to collaborate with you, and so now you not only is it me leading the team, but it's everybody out there that's leading together. And so I'm trying to empower them to make the changes within the organization so that we're all more successful.
Just bringing everybody up as a group. I love that. That's awesome.
Yeah, man. It's great. It's awesome. I
Very
mean, and it makes your life more fulfilled too. Because when I come in the office, I don't have people pointing the finger at me saying, "Hey, you did this." Now it's all of us. If we make a mistake, we're all going back in our sales meeting thinking, we shouldn't have done that, but let's try and figure out a way to make it through the next time.
very cool. You guys aren't point figures. Just try to like, okay, let's pivot. Let's figure out what we did wrong, how we build off this, and just as a team get better and better and better. And that's so cool. I love that.
Yeah, man.
So
Exactly.
cool. So let's talk about some real estate market trends. How do you see the current real estate market evolving, and what should buyers and sellers be aware of in today's environment?
Man, that's a great question. I mean, so I've thought about this for a second, and I think it's obviously volatile right now, our market, and there's so many things that are happening economically that are changing, and the consumer behavior that we're seeing within our space is changing almost at a blink of an eye. I think every single day a buy. I looked up a statistic the other day. It was 36% of people are now that are want to be home buyers are now waiting until after the election to buy a home. And so I think that there's just a lot of people want to buy homes and they probably need to buy homes, but they're just scared. And so I think the but to go back to your question, what what should I think you said what should buyer and sellers be aware of in today's environment? Um, I think they need to be well prepared, and it doesn't matter if you're looking to buy 6 months from now when the election is over, or if you're looking to buy today. I think the biggest thing to do is just be prepared with what it is that you want to do. And so the way you do that is with with the pre-approval, right? Or with an underwriting approval. And so if you know that you can qualify for a home, then when you are ready to make that decision to purchase, you can make a quick decision. And I think you know this as much as anybody, Kevin. I mean, this market is fast paced. I mean, one day a house will go up, and if it's well priced, and if it's a home that's in a desirable area, it's going to move. And I can't tell you how many times a client of mine has come in the office and said, "I'd like to purchase a house, and I already found it." And so by the time we get their application, we get their documents, we get them pre-approved, and we do it fast. But by
Mhm.
that time, a lot of times they've already lost the house. And so I think in the market that's evolving today, one of the biggest things that a buyer can do is just be well prepared, have strong financial backing with the current lender that they're working with, have their pre-approval completed. And that's for the buyers. I think for sellers, I think just making sure they're working with a real estate agent that knows the market, understands it, has their finger on the pulse. They're going to set a competitive price. I think that's key. Um, and then at my branch, we use more of like a data driven approach, and so we're all about data, trying to collect as much data as possible, and we're going to try and keep our clients well informed and ready so that they can act as quick as possible and effectively to make sure that they're getting the house that they want. Hopefully that
I
makes
like that.
sense.
Yeah, no, absolutely. Uh, that's basically what we when we as agents give like comparative market analysis, they're basically, just statistics based off of current and few or past sales. And so the more data the better. So I love that approach. And then you hit it, in my opinion, dead on with the buyers. Just being prepared is huge because it's happened so often that they just that perfect house unfortunately comes and goes so fast, and they have to learn the hard way. And they think that was their own one and only dream home, but it always, it works out in the end. But if you are prepared for when that perfect property comes, then you'll be more. You won't have to worry about having your heart crushed, and because I mean, it's such an emotional attachment. As soon as you see that house, you think it's yours, you think it's the right one, and you run, and then you think you're on top of it by going to and getting pre-approved. But in this market, like you said, it's just so fast. Things happen so quickly, especially if it's priced well. And yeah, you're not the only one that thinks that that's their perfect home. So
Yeah, I think that it's just so volatile right now, and this market is just going to continue to be volatile. I think a lot of people, because interest rates are dropping, I think they're thinking, oh, things are getting better. It's going to be a lot easier now. Things are getting more affordable. But when things get more affordable, more people buy homes, and then prices go up. And so I think it's really important for someone like myself and like you and realtors and lenders just to let our clients know what is potentially going to be happening. And then we just let the clients decide, you know, what it is that's important to them. Is it more important to them to, you know, have a transaction with a interest rate that's going to be lower today or in a few months, or to get a lower price on a home. And then, put the data in front of them and let them decide what's most important to them.
It's a good point. More data, the better. I mean, they can once they see it, like something about having it in front of them, like I'm sure makes all the difference too. You can always you talk to them until they're blue in the face, but something about having it in front of them, I'm sure makes a big difference.
Well, and dude, totally, like, the one thing that is so crazy right now is what the media is doing to home buyers. I mean, it's insane what one day one of my clients will come in and say, I don't think it's a good time to buy. I was watching the news last night and they're saying that, interest rates are going to come down in a few months. And then all of a sudden, the next day they'll call me and say, hey, I just heard rates drop. Should we buy a house? And so I think more than ever, it's important for us as loan officers and people in real estate just to continue to deliver the value of bringing as much information, not misinformation like the media does a lot of times, to our clients so that they're very well informed.
Absolutely. And with sellers, you gotta unfortunately you gotta lower the expectations because we're not in the same market, when the pandemic and the lower interest rates, those days are come and gone, and your house is not the same as it was, worth the same amount as it was before. A lot of people are still stuck on that. It's kind of hard. So, getting that point across, and even though their house is still valuable, but they just think because Zillow has their house estimate at this much because well then Zillow says, and it's like, okay, well, let's go over the numbers again.
Yeah, exactly. And that's it, more media, more online. I mean, no, love AI, and I think it's
Yeah.
the future, but
Yeah.
sometimes it's not everything, right?
Yeah.
Still a
Yeah.
human component to this that needs to be put into place.
Absolutely. I mean, there's professionals for a reason, and those are a great starting point. But yeah, definitely leave it to the professionals to, instead of worrying or social media and the media, all that stuff. It's
Yeah,
so
no doubt.
influential. The shock and awe drives me nuts. But
I know, right?
so,
Same.
let's talk about some interest rates. With interest rates being a critical factor in home buying, what strategies do you recommend to your clients to secure the best rates?
Yeah, so great question, and it's a question that I get on a daily basis right now, just because of what's happening in the market, and what's going on with potentially the Fed lowering rates over the next month or so. What is going to happen? And so home buyers are wanting to know. And so I think the strategy that we put into place, we try and counsel the client to um, not just so we want to maximize their financial benefit, obviously. And so in doing that, we can't try and time the market. So instead of trying to time the market, when we do our best, we have our tools that allow us to look and see the trends and where things are going. And so on good days, we'll try and lock their interest rates in. But at the same time, if we try and time it too much, a lot of times we get burned. And so what we try and do is we try and look at the client's goals instead. And so if we can see where their goal is, we can determine what price range, what monthly payment they're going to be comfortable with. And so in doing that, we obviously look at their financial situation, look at their future goals, see where they're going to be happy. And like I said, although we can't time the market, we try and analyze those trends we try and forecast, what's going to happen if this, Fed member says this one thing. But we can make sure that our clients lock into the interest rate that they feel comfortable with. So that way they're happy with their payment. Because at the end of the day, no one can time the market just right, but we can confirm that they're happy with the rate that they are, or that the payment that they're in, and we can move forward with the rate that's comfortable with it. And so I think the big thing is we try and train our clients on is what are you going to be comfortable with. And when we get to that point, if it's not the exact rate that you want to have, if it doesn't have a 5 in front of it or a 4 in front of it or whatever it is that you want, but you're okay with this payment, is that going to be okay with you? And so we try and get them to determine what that payment's going to be versus what the rate's going to be.
That's huge. I mean, just having that conversation with them is like an upfront. Because unfortunately, I just had a listing that had 3 buyers fall out due to the interest rates. Like these lenders, some lenders are over promising and under delivering, and when they get to the have that conversation about what their payment amount is and what their interest rate is, then they're just like, whoa, 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 this isn't what you told me. And then next thing you know, they're backing out. And so just having that conversation up front makes all the difference, I would think.
Yeah, and I think that's what you get from, and a lot of times, people ask, well, why should I work with you? And I think it's local lender that cares, that wants the best for their client versus a lender that maybe works out of Michigan at a call desk, and just calling for dollars. And so I think a lot of people just don't care enough about their client. And when you care about somebody, you want to see them win. And so I think when how what does win look like? I think a win looks like, what are you most comfortable with? What are you going to be happy with? Not what rate do you have?
Yeah.
I know we all want the best rate, but it really is about what you can afford and what you feel like you're going to be able to pay every single month. And so I think that's what a lot of people forget. And if you can, like you said, if you have the conversation up front versus once you get into escrow and all you're seeing is the news media saying, hey, interest rates are at 5.5% now. Well, maybe they are for somebody, but maybe not for you. And so I think that it's important to have those conversations up front, like you said.
So true. And me not being like I'm just a real estate agent. So anybody ever has a conversation about or asks me about timing or as far as interest rates or anything, I'm just like I always, even if it comes down to just whether it's, they want to buy now or not, it's just like what is the best situation for you and your family. That's all it really comes down to. Who cares about everything else or what everybody else thinks or whatnot? So and it's like you said, it's basically the same thing what you're preaching.
Dude, you hit it on the head. It just having the conversations up front, making sure, and unfortunately what most people won't do is just they don't have those conversations up front, and it's unfortunate because most of those people that ended up wanting to buy a home, they got into escrow just like your client. More than likely, they would have been very happy with that home if they just would have had the conversation up front and known that that would have been the payment or that would have been the rate. And now, a year or two later, when that mortgage when that house goes up 4, 5, 6, 7% in value, they're not going to be worried so much about that interest rate because it'll already have been refinanced. Now they're going to be happy with the home that they bought because now they have a good investment, not just a mortgage payment.
And yeah, you're absolutely right. Instead of and a lot of them are still paying rent and, paying a lot of money for rent. And so it's still like even makes more sense. It just I could see why they would be pulling out though. If you're, you're not expecting it, like, expectations are a totally different thing. And then all of a sudden someone's throwing this at you. I would probably have backed out too if I was in, just trying to look out for me and my family. So yeah, just those conversations up front. Uh, what about adapting to market fluctuations? How do you and your team stay ahead of the fluctuations? And what advice do you give your clients when the market is so volatile,
So
which is all the time?
huge. Yeah. What's that?
Which is all the time.
Yeah, exactly. Right. Right. Especially right now. I
Yeah.
mean, so to answer your question in a single word, how do we stay ahead? We do it proactively. And so I think this was the one thing that I can point to that I can say that we did a good job at here at our team that a lot of places didn't do. And so when we look back, so I'll talk about the business side of things and then I'll talk about the buyer side of things because I think it's so important and they kind of blend together. When you have a business and you're acting proactively on what's happening economically, then you're going to help out your clients better in the future because when you have a business and you don't act proactively, where do the costs going to go to try and earn some of those things that you're missing out on? You're going to charge the client more money because you can't continue to keep your costs down. And so I think most lenders unfortunately tried to keep everybody staffed. They tried to do everything that they could do in order to, make sure that their business was exactly the way it was when things were going crazy back in 2020, 21. And unfortunately, it just couldn't sustain itself. And so we try and be proactive. We manage the market fluctuations in good or bad. This involves just continuous monitoring, right? And
Yeah.
once we see those market conditions change, we got to adapt, and we have to use strategies that we've talked about well beforehand to align with that current market trend. And so I think branch wise, we act proactively where a lot of branches didn't, and now some of those branches are unfortunately out of the business. And so I think that's what we did in terms of business wise, and how we proactively changed and um, moved around to make sure that we could stay open in that crazy time. Um, Buyer wise, I
Mhm.
think when we're talking to our clients, we're just trying to stay ahead of the market fluctuations. So it's all about just education to our clients. And so just educating our clients about the importance of being flexible in the crazy market that we're in right now. And so we provide different buying or selling strategies, and we try and give them as much tools as we can. We have certain things at our office that allows us to send out, you know, market daily analysis, so that the buyer knows, not just us. So some buyers are very interested. Where are things heading? What's happening in the market right now? So we try and push that data out to them.
Daily, huh?
Um, yeah, daily. We have just a daily little write up that we can send out, and we
Nice.
ask them if they're interested in it. Most people say, "Yeah, I'm interested." Some people don't read it. Some people like it.
Yeah.
But overall, I think the housing market has, continued to outperform most other investments in our market. So, like I said, 5 to 7% increase in real estate, I think, in Placer, Sacramento County on average. So we try and have that dialogue with our clients about those market fluctuations that are important. Obviously, they're important. We want to make sure that we're letting them know about these things. But overall, we try and help the client understand that most times we're going to see a benefit to purchasing a home. No matter where the market is, the benefit is in the asset that you're going to hold as a home. And so, obviously, this is a different conversation with buyers that plan to live in a home versus ones that are just buying as an investment property,
Sure.
or maybe to flip or whatever. But I
Sure.
think most times, as if you have a first time home buyer or a buyer that's getting into the market as a second home, or a move up buyer, those market fluctuations aren't going to be as big of a deal if you plan on keeping that home.
Such a good point. You can be riding out the good and bad. I mean, if you sit there and worry about like once you're into the house, like, yo, my house is worth this and that, and that's like, it does not matter because if you're gonna have it like, another 15 years, like worry about it 15 years from now, because that's when it actually is what it actually is worth. But I like that.
And I think like, I don't know, all my buddies that I've helped buy homes in the past, and I'm sure you've got a lot of people that you've helped into homes. I don't ever talk to them, and they're not calling me daily asking me, "Hey, what do you think my house is worth today? Did
Right.
it go up or down?" They're they've moved their families in there, they're enjoying their lives, they're moved on. They're not thinking about that until they plan on moving up. And by that time, 5, 6, 7, 8, 9, 10 years from now, 99.99% of the time, their value has gone up, and they're very happy with the decision they made to buy that house.
Yeah. Got some equity out of it and be able to do that move up purchase. Which is like,
Exactly.
the standard thing that like what a lot of us can say that we've been able to do because we were able to get in that make that first purchase. It is a scary thing, and like, people are always gonna, you know, go there. People are gonna have their yay and nay about it, but at the end of the day, like you said, it's a smart purchase, and the historical trends have always been trending up. So, it just makes sense.
Yeah. And so I think people try and get in their own heads when they start the application process. They're saying, so they'll come in and they'll say, "Hey, is this a good time to buy a house?" I've heard that question almost on every single buyer that I work with, right? It's like, should I be buying a house right now? Is this a good time? And they'll say that when prices are high, when prices are low, when interest rates are high, when interest rates are low. It doesn't matter. They still want to know, and that's what we're there for. We're the experts. We need to share with them that information. And I think the biggest thing that we can give our clients is the data that's happened in the past. And history doesn't always repeat itself, but most of the time it rhymes. And in that situation,
Like
home
it.
prices have always gone up. And so it's a good way to talk to our clients about going out and buying a home. It's a smart investment. It's one of the smartest investments you can make for yourself and your family.
Like it. I like it. So let's get into some home buying tips. What are the top 3 pieces of advice you give first-time home buyers navigating today's market?
Yeah, so this is a great question, and we try and try and talk on these things every single time we sit down with a client to look at a home or look at a mortgage. And so the one of the biggest things that we're going to do, the very first of all, before we talk about anything else about the loan product or the interest rates or whatever else, we need to understand that client's needs and understand their money. And so basically, what we do is we look before we even start looking at houses or anything. We want to get a clear picture of their finances. And so this is going to mean knowing how much money that client can spend and what those monthly payments might look like. So in order to get to that, uh, get to that, we need to look at their income, their debts, and get you to the point of actual approval for that loan. And this is going to get you that budget for shopping. So it shows you what you can afford. And so the big thing for us is the tips that we're going to give you is, hey, let us look at your file. Let us confirm what it is that you can qualify for. Don't get into your own head of trying to have you go on Google, you type in a mortgage payment. Is this what I qualify for? I think I can qualify for $3,000 a month. Okay, but have you actually looked at your total budget? And then once we've determined what we feel as a lender they can qualify for, we ask them before we give them that number, what do you think you can qualify for? Because a lot of times I'll tell you, hey, you can qualify for a $7,000 a month payment. And now all of a sudden that client is coming back to us saying, shoot, I can't afford that. And it gets in their head, and now they feel like they either need to go buy that big of a house or they feel like maybe they shouldn't buy because I've just scared them. And so the big tip here is work with a lender that's not going to look at just what you can qualify for, but work with a lender that knows what you want to qualify for and make sure that they're evolving your loan around that. So I think that would be my first tip. My second tip is just making sure that you have the right loan. A lot of times, when we work with these lenders,
Mhm.
they're going to just put you in to a loan that they feel is best. They're not going to ask you questions about what it is that you want out of this loan. How do you feel about a different types of loans that are available to you? And they're just going to try and get you into the easiest one. They're going to say, okay, conventional loan is easy, or FHA loan, that sounds good. They're not
Mhm.
going to talk to you about the down payment assistance loans. They're not going to talk to you about the first time home buyer packages that we can deliver. Or maybe there's some certain city programs that might work well for them. So there's making sure that we find the right loan that will save you the most amount of money. And then, like I said, we talk about down payment assistance loans or first time homebuyer strategies that make the most sense for you. And then, depending on how long you plan to stay in that house and what your financial future looks like, then we determine of what that mortgage is and what fits your life the best. And so I think that's be my second thing. So first, talk about a pre-approval,
Mhm.
how it is that you can, what it is that you feel you can afford.
Yeah.
And then secondly, looking at the different loan programs and approaching them all to make sure that you are most with the most comfortable one. And then third, the biggest thing I think that most people don't think about when they're buying a house is planning for the unexpected.
Yes.
And so it's not just paying a mortgage, right? It's not just
Yeah,
paying a rent. It's
yeah,
different now.
yeah.
And so it's all about making sure they understand the other costs that come up during a home purchase. So, once you own a home, maybe your insurance is going to go up. Insurance is crazy right now. Every single year, I feel like my insurance is going up by like 20%. I'm sure other people's are going up a lot more than that. If you're living up in,
The
Forest
hills.
Hill or the
Yeah,
hills, yeah.
yeah.
And so it's just smart to have some money set aside in case something does happen, your AC breaks, you got to get a new roof, whatever those things were going to come up later on.
Because it's not if, it's when it happens. Because
Mm,
it just, I mean, it's not, if it's not one thing, it's going to be another. No matter what, you are the homeowner, so you're the one that's fixing this stuff. It's not going to fix itself. You can't call the property manager or anything like that. So, yeah,
yeah,
I absolutely.
expect you got to expect the unexpected because a lot of times, let's just say you do go get pre-approved and you work with the online mortgage lender. What you're gonna see is you're gonna put your information in, you're gonna get a pre-approval letter, you're gonna go out, you're gonna look for a home, you're gonna buy a home. But how did you know that that loan program was the best? Can you afford that payment? Because they never really went over it with you in the first place. And then you buy that house, and then did you actually did you know about all these other things that could happen after you purchase the house? Because now you maxed out your pre-approval and you are paying you're paying your $5,000 a month, and that's what you can afford. So if you need to pay $7,000 a month one month because you've got this AC unit that just busted, you don't got it. And so
Good
that's the
point.
most important thing. Yeah.
Local is such a difference. I mean, you guys, I unfortunately like I had a client like one of my very first transactions, and this guy was with one of those big box lenders online, got the pre-approval online, just like you're talking about, and it was hell. Like from every step of the way, just getting in touch with someone, and then like he has no idea what he's getting into, and I can't. He's already made that decision. He's already got the pre-approval, so there's no like getting him to go talk to another lender or anything like that. So unfortunately, it just they have to learn the hard way. But if they could just listen to someone like you, just come to someone that's local. You guys are amazing. You guys, I mean, night and day. Like I can't even. And I'm not just saying this because I'm local, but like it literally like there someone behind a computer at a desk dialing for dollars like you're talking about and doesn't care about you, doesn't know your situation and just trying to throw a loan at you so they can make their money too.
Yeah. It's exactly just like you said, you're asking for the top three tips. Well, you're not going to get those tips. You're not going to get that information. All you're going to get is a pre approval letter, and you don't even know if you can qualify for it personally. The bank might say you can, but can you really?
Point. I love that. So let's talk about some home selling insights. From a mortgage broker's perspective, what should sellers consider when preparing their home for the market to attract qualified buyers?
Yeah, I think it changes based off the market that we're in. I mean, right now, in this market that we're in today, I mean, this is always an important thing, but I think more than ever right now, it's just pricing your home accurately. I think I have so many buyers that I've pre-approved recently, and they can't purchase until they sell their homes. And I'll check with the real estate agents asking, "Hey, how is it going?" "Oh, we haven't sold yet, so we're still waiting." Well, what's going on? Well, I've told my buyer they need to price it at this level, and they want to price it here, and they won't listen to me. And so now they've been on the market for 60, 90, 120 days. And now when a buyer goes and looks at that home, they see it's on the market for that long. They say, "Ooh, what's wrong with that house? Something must be going on there that is sitting for that long." And so I think pricing your home accurately, sometimes even pricing it slightly lower, can actually work in the favor of that seller because you're going to drop a lot more attention to your
Mhm.
property. And then this is going to lead to more offers, obviously. So sometimes even sparks up a little bidding war that could push that price above what you would initially expected. So a lot of people get scared and they want to price their home high because they feel like their house is worth it. But in reality, listen to the real estate agent. Make sure that you're pricing your home accurately, or maybe even slightly under, so that way you can get more people in the door, more offers, and potentially, like I said, spark up that bidding war.
It's so true, especially in this market. Like if someone there's so many buyers out there looking for an affordable home. If they see something that is like in their price range and even a little bit lower, like, like that there's people jumping all over that. There's multiple offers and you're not going to be the only one. So like I don't understand why sellers are so those expect going back to the expectations, we're not in the same market, but they think, cuz Zillow and all that says that it's worth that much, but at the end of the day, it's only worth what buyers are willing to pay. So it comes down to what do you want? Do you want to sell the house or do you want it to sit on the market and for people just to look at? Because, like you said, people are going to look at after so long, what's wrong with this house? And then those serious buyers that are pre-approved, ready to find their dream home, they've gone the first week because it's out of their
Yep,
price range. And so they moved on. So now you're just like, well, you've already excluded all these buyers that are really or the ones that you're looking for just by pricing it too high,
dude, exactly. And it's like,
fortunately.
and I think a lot of times, unfortunately, so when I bought my house back in 2000. I bought it at the time where prices were actually really high back in COVID. I think it was like 2000 and I think it was 2020 or 2021. I can't remember now. But the house was sitting. It sat for a long time. It's in Penryn. It's a beautiful community,
Nice.
and we wanted to be in Loomis or Penryn, and we wanted some acreage. And I I I went and looked at this property online. I thought, man, this thing is trash. Like, who would want to buy this property? And unfortunately, the real estate agent that had listed it was from the Bay Area, and
Mhm.
she didn't know how to list a property like this in Penryn with acreage and whatnot. So the pictures that she was taking were not what she should have been pointing out. She should have been pointing out the acreage and the views and the things that are important to a buyer that's going to buy in Penryn. Instead, she was pointing out the kitchen appliances from the 1980s and things that nobody wants. And so when I went in to see this property, I was able to get a really good deal on it because of the fact that the listing agent didn't do a good job. And so I think it's really important to not only set the price right, but to work with a real estate agent that's local to the area, that knows the market, and that is a legitimate real estate agent that's not doing this part time. So work with somebody that's in it to win it for you, that's going to price your home accurately, it's going to know how to handle negotiations, that's going to know how to market your property accurately to get the best possible outcome and create a ton of buzz around that property.
Absolutely. I agree with you 100%. So, what about building a strong team? So what processes do you have in place to ensure that your team delivers consistent, high quality service to clients?
Yeah. So I think the three things that I could think of off the top of my head here, I think that um, just continual education is one of the biggest things when we're talking about team and how we continue to build on the team that we have. It's not just a one-time thing. When someone wants to say, "Okay, I'm new to the industry, or I'm new to your team," yes, we're going to give that training, but we keep everybody up to date, not just the newest people coming in, but on the new mortgage products, rules in the industry, how to use our tech tools here at our company. Things are always changing, so this is going to mean that our clients are always going to get the most current advice and solutions tailored to their needs as well, because it's not just you know me going and talking to my most current loan officers, but I'm training everybody in the group. And so we do sales meetings every single month, and we want to make sure our team knows their stuff. So our clients don't have to worry about things that could potentially be better with somebody else. Um, I
It's
think that's the
huge.
first thing would be education. Second thing would probably just be, I mean, on anything, I what the most important thing on anything is a lot of times is communication. I think that we all can be better about communication no matter how good we are already, and just expectations. And so I think right from the start, when we bring somebody on, we make it very clear what we expect from our team in terms of just the service that they need to deliver and the professionalism they need to have. So in those meetings, um, those sales meetings that we have, we try and catch up on what everybody's working on. We try and solve problems. We celebrate the wins that they've had, and in doing this, this is going to help keep everybody on the same page and focus on what's most what is most important. And what do? We help people buy homes. And so that's the most important thing. And so we keep that front of mind when we go into these sales meetings. How can we continue to help people buy homes and get them the most success out of that? And so I think when we have that goal that is clear and concise, our expectations can we can make sure that expectation is there as well. And then it just provides that consistent and reliable service to every client that we have. And so I think that that's probably the second thing we do. Um,
Yeah,
I
that
don't know.
sounds
I
great.
think yeah. So I think the first thing being training, education. Second thing being communication and expectations that we have for every single person that we have come into our office. And then I think culture is number three. I think we try and team build as much as we can. And when I say team build, I don't just mean like going out and just having fun. I think
Yeah,
that's important, and I think that that's a really good thing to do.
sure.
But it's all about just strengthening the team so that we're all in it together. And so I think when our loan officers here and our staff and we all get together and we're all getting along, we're understanding each other, we're working better together. This is going to mean that we're going to have a smoother, faster service for the clients and make sure that we're able to support each other as well. That
Yeah,
was a
you bringing
long-winded answer.
everybody up.
Sorry.
No, that's okay, and it's accountability, it sounds like, too. You guys keep each other accountable, and everybody brings each other up. It's awesome.
Yeah, I mean there has been several times where where I've had interviews here, um, where I we've turned somebody away because they didn't fit our culture that we want to have at the branch. And so I think it's really important when you're hiring and you're trying to build a team to make sure that every single person that you bring on, it only takes one bad apple to make a team go downhill. And so I
So
think
true.
we really, really focus on making sure that those people that we're bringing on meet our culture and they're going to want to be a part of it, not just, you know, be in the office once in a while. They want to be a part of what the team that we have built here.
Not just, like, going through the motions and being the individual, but it's all about the team, and you can probably see right through that, like, people are trying to put on a front, and that's probably what you're talking about, like, just, they're not for you, so not good for the team, so you just on to the next one.
Yeah, and a lot of times what we'll do, so we won't hire somebody on here so I'll interview them first and make sure that they're at least what I feel would be a good asset to our team. But then after I've interviewed them, we'll have them come back a second time and I'll have them meet with a few of the other loan officers here beforehand.
Nice.
So that way I'll get their buy-in as well. Just like I said, it's not just me. I'm trying to lead from within and not just be in an ivory tower. So I can sit them down with three or four or five or six other loan officers and say, hey, what do you guys think about this person? This person wants to come onto our team. We'll ask them some questions, see what your thoughts are. And if they can meet the expectations of these other guys out there, then more than likely we're going to have a good fit.
It sounds like you guys is I don't know if you call that success rate or whatever, but you retain a lot of by doing that, you don't have a lot of, turnover, do you?
No, our retention is super strong here. Most of the loan officers that work in my branch, they're not going to go anywhere. Um,
Love it.
oh, let me skip this. Sorry.
That's okay.
So I don't know why the phone keeps ringing because I have it off. So I'm not sorry about that.
Oh, I don't even hear it. You're good.
Oh, you don't? Oh, okay,
No.
cool.
Nice.
Um,
Uh,
yeah, so
Sorry.
I think the retention rate is really high in our branch just because of the fact that all of the loan officers here agree that they want to be together, and we do things from within the organization. So all the events that we have, all the things that we do, it's all planned from within, and they all want to be a part of it. And so it makes it really easy.
Yeah, that's cool. You actually want to be around you people. It's not each other. It's not like, you're just going through the motions or doing it just to in front of your boss or something like that. So
Exactly.
that's very cool. I mean, that says it all. Your retention rate, like nobody wants to go anywhere because they obviously love it. So you're doing
Yeah,
something right.
it's a great place to work, and I what I try and do is I just trying to deliver what where I would want to be. If I would want to work somewhere, what would I want from my leadership?
Are you guys constantly looking for like quality team members, or is it you like at your peak, or like how does recruitment go for you guys?
Yeah, no, absolutely. We're constantly looking. Constantly trying to bring on good people. And so, what we do is I try and recruit to the people that I would want to see in the branch, and then and a lot of times it just comes organically, right? So a lot of people will call me and they'll say, hey, I've heard great things, I see great things, I know what you guys are doing over there, you're one of the top branches in the space, I'd love to be a part of it. And so a lot of times I don't even need to do anything, they just call me and we run with it. But yeah, I mean, there are a lot of good people in this space that I would love to bring on, and I continue to have conversations with them, and eventually, more than likely, we'll have them over here. But it takes some time. It's a tricky thing, recruiting.
Oh, I'm sure, especially if they're already somewhere and established, like, you go back to people being comfortable and don't wanna change or, that uncertainty, so, but I'm sure once they actually come on, they'll realize how amazing it is, but, um,
Yeah,
it just shows that, like, obviously what you guys are doing is right, so,
yeah,
very cool.
man. Thank you. I appreciate that.
So going back to kind of real quick, we're running out of time, but I think we got
Yeah.
enough for one more. Going back to technology, I know we briefly talked about AI, but with market analysis and stuff. But how do you and your team utilize technology to stay informed and provide the clients with the accurate market analysis, mortgage options?
Yeah, I think what sets us apart from other lenders is, we've put a lot of money and had a substantial investment go into our CRM system. And so personally, I've spent over six figures in Salesforce, and just implementing exactly the way that I feel, um, when I was doing loans on my own, and I didn't have the team that I have today. I spent a ton of time and energy and money into building out a system that I thought a client would want to see in going forward with a loan. And communication is key, and so getting as much as possible, um, getting as many touches as possible was really important. So I completely customize my Salesforce CRM to it. Basically, it's so seamless. It integrates, market data, client interaction, it updates, and so I think the technology, and it also has AI tech capability as well now as well. So
Great.
I mean, it does everything that I needed to do to deliver communication and tailor-made um, advice to our clients.
And that's for not just you, that's for your whole team, right? Your whole brokerage.
Yeah, so the team, so it depends on which one they want to use, right? So when a loan officer comes on, there's obviously a cost to things. And so if they're performing at a high level, then they are given this system because they're very well they're performing enough. But if
Hmm.
they don't have the performance there quite yet, then they are put on a different system that we use, called Total Expert. And so Total Expert is another great system, but a lot of times Salesforce is a little bit too much for the loan officer that's only doing one or two deals a month. But if you're doing, five, six, seven, 8 deals a month, you need a lot more from your system. And so it just really depends on the loan officer and what they're doing.
Makes sense. Just the capability of the two systems. That's so cool that you have the AI. Just it's just another aspect of just helping you guys do better at your job. I take it, not
Yeah.
really taking the place of anything, right?
Yeah, it's awesome. I mean, a lot of times, clients will email and then a response will automatically populate. And a lot of times that response is better than what I would have actually written.
Yeah,
Oh, shoot. I
yeah,
need to be
yeah.
better.
I
But yeah,
like that.
AI is so smart now.
It's so cool. I love it. I mean, it's here to stay. I'm one that likes to embrace it and just take advantage of it, use it to the fullest. And I love being able to use any chance I get. So especially as a real estate agent, like you're saying, like the emails and the follow ups and just the communication wise. My CRM is also pretty cool and it has some AI into it too, but it's just very robust and has a lot of things of being able to keep the communication and the touch points and all that kind of stuff. Like you said, uh, goes a long ways. That's for sure.
Oh, no doubt. Yeah, it's so important. I know a lot of times, we look at other brokerages and other lenders that just don't have access to this stuff, and I thought, man, how could you work in a space like this and not have access to a CRM? But
You
it's
You guys must be on another level though, right?
yeah, I mean, like I said, we've put a lot of money and time into it.
Yeah. I mean, but you're getting a lot out of it. I mean, could you imagine
Oh
not
yeah.
having these systems? Like, yeah, that's gotta be crazy to think about.
Oh, it's absolutely necessary for the business that I run today.
Very cool. Well, it's only in my mind, only gonna get better and, more tools and more things just to make our lives better and the consumers' lives better, so I see it as a win-win. Uh,
Mhm.
so I'm excited to see where it goes. Um So what about future of the mortgage industry? You have I got one more for you, if you don't
Yeah.
mind, unless you want to wrap it up.
No, you're good, brother.
Okay, cool. So what are your predictions for the mortgage and real estate markets over the next few years, especially concerning interest rates and home prices?
Yeah. Personally, I mean, I could be completely wrong, but personally, I have some opinions, and I um I think we're seeing changes before our very eyes right now. I think there's been a lot of things that are coming down the pike that are going to change the way a buyer purchases a home, change what's happening in our industry. Um, and economically, I think interest rates went up quite a bit, right? And I think interest rates at one point were over 8%, and now we're seeing things come back down to where it's a little bit more affordable. And so that Fed fund rate, they were going to try and lower that here in September, I would imagine, if not sooner, by a quarter or half of a percent, and that's going to make buying homes a bit easier for clients, because if rates cool down a little bit, then it could mean that more people get back in the market. It could end up that prices bump up because of it. So we'll see. If rates do come down too quick, it could be a bad thing where all of a sudden you get a flood of people, just like we saw in COVID. But I
Mhm.
don't think it'll be fast. I think it'll be a slow burn where rates will come down slowly but surely, and people will start trickling into the market when they see that they're financially able to purchase homes. For anybody that's out there that's thinking about buying a house, or even working in real estate, I think the big thing that's important to keep an eye on is just how quickly things can change. And so it's going to affect how much you can afford, or how much money you're going to make in the industry, right? And so as a buyer, just or as a seller, just keep an eye on it. Make sure that you're comfortable with those things. If when rates go up or down, make sure you're talking to your loan officer. Make sure you're, looking at the changes of what a half of a percent better or a half of a percent worse interest rates are going to do to you. Um, and then, as a person getting into the industry, um, be okay knowing that you might have some really terrible months if things, if rates go up again, or, and you could be doing everything correctly, but the market controls the narrative a lot of times. And so, just be
Totally.
okay not closing as many loans as you maybe once did before, or many transactions as a real estate agent that you once did before. And then I think, um, like we talked about, I think tech is becoming a huge deal in our industry. And I think it's making things faster and easier than it's ever been before. I mean, I know in my industry, applying for a loan when I got in the industry 15 years ago, I was I had to be on the phone almost 24/7. There was no, we didn't really text or email as much. It was
Really?
mostly all through the phone. Now, if you wanted to buy a house, it could literally be done all over line. I don't think that's the right way to go about it, but
Mm.
it's very possible that you can do everything online and have everything done through our system, which I love. I think it's all about making the process smoother and more friendly for everybody, but at the same time, make sure that you're getting um, what you need out of your potential realtor or lender.
Point.
And then, so yeah, I think overall, the market has its ups and downs,
Yeah.
but
Yeah.
like we talked about, real estate is usually a solid bet in the long run. So I think with the right approach and a bit of, planning smartly, I think we can always handle the short-term waves, because in the long run, real estate's always a good thing to do.
I love it. It's a good way to end it. Well, JJ, I can't thank you enough for the support and coming on here. Did we miss anything? Is there anything else that you wanted to discuss?
I don't think so, man. I'm glad that you asked me to do it. I felt honored that you chose me. So thank you.
Thank you, man. Awesome.